Welcome, and thank you for joining today's webinar on fraud training for AMP Chapters. Today's webinar is presented by Weaver, a national accounting firm specializing in financial institution consulting. Our speakers for today's webinar are Travis Casner and Anthony Pabillano. Travis Casner is a managing director in Weaver's forensics practice and has over 12 years of experience providing investigative and forensic accounting services for public, private, and not-for-profit organizations. Travis has led numerous financial forensics investigations involving allegations of fraud, financial misrepresentation, commingling of funds, misuse of corporate funds, conflicts of interest, employee misconduct, and theft, and other types of white-collar crime. Anthony Pabillano is a manager in Weaver's forensic practice and a certified fraud examiner with more than 9 years assisting in forensic investigations for the federal government and several public accounting firms. Anthony's experience include various occupational fraud and dispute matters, as well as white-collar crime investigations. Additionally, Anthony serves as treasurer for a local not-for-profit organization based in Houston, Texas. Before we begin, just a quick housekeeping note. All attendees are muted. If you do have a question, please post your question to the Q&A tab at the bottom of your screen. Without further delay, welcome Travis and Anthony.
Yeah, thank you, Heather, and thanks everybody for giving us the opportunity to speak to you today. Anthony and I are happy to be here to talk about fraud and fraud prevention and internal controls. And so we've put together this webinar intended to share some specific items that relate to not-for-profits, and hopefully we'll show some ways that internal controls can be improved and fraud risks can be reduced for not-for-profits of any size, regardless of resources or other vulnerabilities. And real quick, just to kind of run through the agenda for today's webinar. So we're going to start by talking about some trends and some statistics from the Association of Certified Fraud Examiners. Does a report every 2 years, and they actually had a feature piece on the not-for-profits and some of the vulnerabilities and trends. And so we're going to start by talking about those to kind of set the landscape a little bit, and then we'll dive into some specific internal controls for the relevant areas for not-for-profits, and including separation of duties, financial monitoring and reconciliation. We'll talk about revenue controls, expense reimbursements, some considerations for credit and debit cards. We'll talk about fundraisers and scholarships, as well as records maintenance, data security, and then end with internal policies. And then we definitely want to leave time at the end to answer any questions that you might have. So to start, looking at some of the data from the ACFE Global Report to the Nations, as I mentioned, they highlighted the NFP specific area a couple of years ago, and there was some interesting data points here that I wanted to touch on as it related to fraud. So you can see here the chart on the left shows the different fraud schemes and the percentage that impacted nonprofits, and these are based on the ACFE does a survey, and they usually get around 2,000 or so cases every 2 years, and of those, about 190 related to NFPs. And so they did an analysis, and this is a breakout of the fraud schemes. And so just a couple of observations here. The largest corruption is 41%, and this is true for most industries and public and private organizations. And corruption, we're talking about bribery, kickbacks, conflicts of interest, those types of things. And so it's about in line with what you see with other organizations. When we're talking about billing schemes, these could be shell company or fictitious vendor schemes, personal purchases with a credit card. And what we noted here was that 30% is actually a little bit higher than it's usually. Low 20% is other organizations. So with specific to NFPs, the billing fraud is a little bit more common, at least according to the data from this survey. Expense reimbursements. This was another one that was 23% compared to about 12%. So this is one that is another one that really stands out when compared to other industries. And then cash on hand. This is somewhat prevalent for NFPs. Non-cash. This could be equipment, technology items, raffle items, those kind of things. Skimming. And so just it really does a kind of a good breakdown of the types of fraud schemes that impact NFPs. And then on the right, you can see the median loss was 75,000 for these 191 cases, with an average of 639,000. So just to put some numbers on the dollar loss for across all the fraud schemes. There was also some, the study included a review of the number of cases by perpetrator and then the dollar median loss. And so what you can see here is that the most common perpetrator with 39% of the cases was at the owner/executive level, which also had the highest median loss of around 250,000. And then below that, 35% was manager or supervisor. There was quite a bit of a drop off in the median loss from 95,000, and then finally at the employee level, 23% of the cases with a median loss of 21,000. So you can see the difference in the median loss, and this is somewhat typical of most organizations, but it does go to show where the likelihood of where fraud does tend to occur is at the manager or owner executive level. And then just another kind of a snapshot looking at the data from a detection standpoint. 40% of the frauds that impacted not-for-profits were detected through a tip or a complaint, and this could be a formal hotline that's set up, a web-based hotline, or it could be an informal complaint or an anonymous complaint. And this is usually, we see this is by far the most common method of detection. Usually involves somebody who is working closely with an individual that they suspect of fraud, waste, and abuse, and somebody that has that knowledge and kind of comes forward with a concern or complaint or an allegation, and then that leads to the investigation and uncovering of that. After that, it was internal audit was 17%. So there's slightly somewhat of a drop off, and then management review by accident, and then examination documents. And so one of the things that we're kind of here to talk about today is there's increased vulnerabilities for not-for-profits compared to other organizations, and we're going to talk about what those are, and then go into some of the internal controls. But based on the data from this survey, that the top 3 control weaknesses were 35% observed lack of internal controls, 19% had lack of management review, and then 14% overriding of existing internal controls. And so I think the lack of internal controls, and you can see in the chart to the right where the green bars represent NFPs, and then blue is other organizations. So when you look at things like surprise audits, it was about half as many organizations had surprise audits. For formal fraud risk assessments, it was 24% for NFPs compared to 43% for other organizations. Management review, 44% compared to 68%. And then, an internal audit department as an internal control, 57% compared to 76%. And so, that's, there's still, regardless of some of these internal controls, they may not be applicable, but there are other internal controls that, can be put in place to overcome some of these vulnerabilities. And just going into a little bit more detail specific to the not-for-profits and what we've seen based on our experience. We talked about lack of internal controls in the last slide. Another vulnerability is that there's a tendency for the authority and control to be centralized in a single person or individual. If there's no term limits, or if it could be just due to the size of the organization, that's something that we have observed that could increase the fraud risk. Insufficient resources for financial oversight. There's a tendency where an organization does not want to report a potential fraud due to the negative publicity. This is probably more related to charitable organizations that may risk losing donations. There's donations that are being provided or submitted that are non-reciprocal in nature. Cash transactions, donations that make it harder to track potentially. NFPs have reliance on volunteers, and then there's sometimes there's a use it or lose it mentality where funds, and we see this a lot of times with grants where if there's funds that are made available for specific use and they have a certain timeline that they need to be used, there's a if they don't get used, then you risk losing them, and you see this falls more into the waste and abuse category. So to start out with internal controls, and I know that you probably heard this one a lot, and this is kind of the fundamentals of internal controls, but separation of duties, and this is really critical for when there's smaller organizations. Even if there's 2 people, there really needs to be separation of duties. And so what we're talking about here, dual verification and approval for transactions. So having 2 different individuals, if one individual is responsible for purchasing, then another one would be responsible for approval and entry into the accounting records. Individuals should not have control over multiple aspects of a financial transaction. And there's some other examples, but the one at the bottom is important. Monthly bank statement reconciliations by individuals independent of the purchases and approvals. It's to be effective. It really needs to have an independent review of the transactions for separation of duties to be effective. And then one of the ways that the organizational structure and separation of duties go somewhat hand in hand, but it's really important to implement strong organizational structure. Accountability for an organization's activities is part of the organizational structure. A good organizational structure will allow for increased financial transparency, and to the extent that there's the ability to do so, the use of committees or even subcommittees is important for increasing, delegating and increased participation, which, talking about separation of duties by having that framework where you have individuals responsible for specific functions really helps in creating an environment where there is this multiple layers, and you don't have one person that is has control over multiple functions. We've listed some sample committees based on our experience. Operations, budget. The committee structure works well for budgeting, where you have groups that can really get into the have granular knowledge for that specific area. Like fundraising is one that we see, or the events committee down here at the bottom, programs, publicity. So the committee structure can really help to implement or ensure separation of duties. And then as far as election of officers go, term limits can be important to ensure that that there's not one person that has kind of overreaching authority and making sure that the election of officers by members that are in good standing, appointment of officers, should really only be considered under, specific circumstances. The organization's website should be updated based on the changes of officers. And then we've listed some kind of the common officer positions here. And, it's also important just to ensure that there is, a clear assignment of, roles and responsibilities for each of those positions.
Okay, hello. So now we're going to talk about the financial monitoring and reconciliation concepts. So it's good practice for an organization to implement an accounting software. And if it's not available, then the individual chapter should utilize some sort of accounting software like QuickBooks, and preferably web-based. So QuickBooks Online versus QuickBooks Desktop. Because Excel alone, using Excel to perform record keeping and for reporting is very prone to inefficiencies and errors. And it's good practice also for all chapters, every single part of the organization to standardize groups of revenues and expenses, or even more granular specific revenue and expense accounts that will assist in consolidation and just makes that process a lot smoother and easier down the road. And also it's good practice for, especially nonprofits to, engage themselves in budgeting, utilizing prior year receipts and disbursements, and, layering it with other considerations for the upcoming year to create some sort of financial budget for the year that's upcoming. It's good practice to assign ownership of the budgeting and monitoring to the individual chair people, because the different individual committee chairpersons are the most knowledgeable about the activities within their committee, and also it would instill some sort of accountability in them in terms of controlling costs and just driving the point of staying within their budgeted amounts. The approvers, the committee chair people, and especially the vice president, should ensure that expenses are, within the budget, that the expenses that's coming along their way in terms of expenses that's being asked of them to approve should be, expected and should have been planned in the prior year's budgeting process. It's also good practice for the vice president or whoever is in charge of the budgeting committee to provide periodic updates to the rest of the executive leadership team or the board members, providing updates in terms of what the actual expenses are against the budgeted expense amounts. So in addition to the activities that the treasurer performs, it's good practice to assign a different officer within the organization to perform independent reconciliations, because the bank statement reconciliation is already part of the process that the treasurer undertakes in closing the books each month. So it would be good practice for another officer in the organization to review the different transactions reflected in the bank statements and comparing them against the transactions reflected in the books, the accounting records. So things like reviewing the checks that were dispersed out of the chapter's bank account, reviewing the deposits and various sources of income, that's coming into the organization. It's just a good practice. And it just provides a level of checks and balances to the work that the treasurer is performing.
Yeah, and Anthony, I would add too, for reviewing the check images, some things that are, to be particularly, pay attention to, the payee names, comparing to what the check images reflect to, what is entered into the accounting system to make sure that there's no inconsistencies there. That's a common one, as well as, amounts and, with ACH payments or wires, I guess the bank statement should have detail as far as the, the source of funds or, who the funds were transmitted to and comparing that, just to ensure that it's a somewhat simple step, but that's a lot of times where we see that there are, evidence of fraud in smaller organizations. It is as simple as, that the organization, failed to reconcile the bank statements on a, monthly or even bi-monthly basis. But it's, at least every few months, it's a very important step for, ensuring that internal controls are in place and that there's not any, the funds are going where they're intended to.
So the organization, it's good practice for the organization to perform surprise audits because according to the ACFE report, the 2014 issue. By the way, the ACFE's report to the nations is released every 2 years, and they're available for free online for anyone who's curious about reading those issues further. But according to the report in 2014, financial audits is among the least effective in terms of detecting fraud in the business world. 3% of the cases that they studied in 2014, only 3% of the cases that they studied in 2014 were detected using through the financial audit process. The financial audit, the independent financial audit cannot be relied solely as the organization's primary anti-fraud tool. Surprise audits would really test the controls in place in the organization, specifically in the chapters, in their efforts to prevent and detect fraud, and also just having that awareness in people's minds that a surprise audit, could occur at any time is a very effective means of deterrence, of preventing people from committing inappropriate, fraudulent activities in the business. So that element of surprise is very critical. So, just the very nature of it. This kind of audit should not be given in advance. To prevent employees and volunteers from concealing any activities that may be inappropriate.
Yeah, and even if there's a small chance that a specific, chapter would be subject to a surprise audit, what we found in other organizations is, just the possibility of that occurring is, a very strong deterrent for people if they know that there is a chance that they're going to be, more scrutiny and review, on a surprise basis.
And if possible, I think, and if the organization is willing, a hotline, implementing some sort of reporting mechanism, mainly through hotlines or through some sort of web-based form or emailing a specific email address within the organization to report, suspicions of inappropriate activities, is an effective tool an organization could implement in order to detect fraud within their organization. So some statistics from the ACFE. in the cases that the ACFE, studied in 2022, the organizations that implemented some sort of hotlines were able to detect fraud, 6 months faster than those without. And those organizations that implemented hotlines experience loss that are half as much as those without. And also, in terms of the cases that they studied, the frauds were detected via tips. 47% of the cases, a much higher rate than those without some sort of hotline or reporting process in place. And whenever, so it's not just, it's one step to implement some sort of reporting mechanism, but organizations should also take the next step, the following step of conducting training, training their employees, their volunteers about the presence of that new tool and just how to use the hotline, etc. So conducting trainings in addition to implementing a hotline. Frauds were reported 58% of the time, a much higher rate, 60% higher than in organizations that may have implemented some sort of reporting mechanism but did not take the following step of training their employees or volunteers.
All right, thanks, Anthony. So switching gears now to, we're going to talk about some specific controls related to, revenue or the receipt of funds that can, help to reduce the risk of fraud, waste, and abuse. It's important to, regardless of which form that the funds are received, recording the details of those revenues. And so, for example, if it's a fee received for a registration to an event, recording the name of the individual and the date and the event. If it's a sponsorship, the type of sponsorship and what if it's associated with a specific event, if it's a donation, and that can help really just to, from a budgeting standpoint, as well as for performing a review and trying to going back and looking at the end of the year at revenues relative to what was expected for a fundraiser event, and having that detail to determine who attended and for which events, it can really be useful in having that detail to the extent it's able to be collected. And then as far as the different ways that revenues and funds are received, we've listed 3 here. So these are listed in order of, where the most, detail is able to be included to the least. And so starting with the online payment platforms. And so these are, PayPal, Square, especially with the point of sale systems capability. These are the most effective way for recording the details for payments received, where you have the flexibility to enter in those fields and kind of form how the layout of the data and what information is recorded for each transaction. For checks, ACH, or funds that are received through a wire transfer, there is some ability to enter in, if it's a check, for example, a check memo, to record those payment details. It's to a lesser extent than the payment platforms, but it still does, to the extent there is the ability to record some kind of detail. We advise that organizations do so. And then cash, this is the least desirable. It has the highest risk for a number of reasons, but then also limitations about data that is can be recorded and associated with the receipt of those funds. And then talking specifically about the online payment platforms, and there's really two different types. There's the point of sale platforms, which PayPal, Square, Stripe, where they have the mobile readers where you can transfer the funds at an event and that sort of thing, versus the direct fund transfer platform. So these would be more Venmo or Cash App. But regardless of which one is used, one of the things that's important here is that the balances should be managed, and ideally minimal funds should be maintained in the online platform and transferred to the organization's bank account. And a couple of the considerations here is FDIC insurance, interest that can be accrued, and just the security of those funds. Having large sums that are in a PayPal or a Venmo account poses a higher risk from a fraud standpoint. And then understanding that the payout schedules for the specific platform that's being used, because there are some differences here. PayPal and Venmo, those require that the user has to proactively go in and transfer the balance to the appropriate bank account, whereas ones like Square, there's an automatic transfer within a business day. And so there's differences there just to be mindful of as far as managing the cash, the fund balances in those platforms. Ensuring that there is a asset account in the books for each platform used for purposes of transparency. And so having a specific line item for the PayPal funds, for the Square is important. And then also exporting and maintaining periodically the statements from those platforms, including the detailed records that we were talking about on the previous slide, and recording those will be very beneficial. And it's also important to note too is that the way that the payment fees are, there's also differences within each platform as far as when the fees are deducted, and in some cases they're automatically taken out before the transfer. And so it's just from a record keeping standpoint, definitely be mindful of making sure that you are accounting for those fees associated with the use of online platform. It was specifically for the point of sale terminals, pairing those to the organization's accounts, and then programming them for expected sales will help in order to make sure you're recording the types of data that are relevant. Consider dedicated tablets for the terminals, ensure that corresponding mobile applications are signed in under the organization's credentials. For PayPal as an example, the PayPal does have the ability to make outgoing payments. We recommend that these platforms, primarily be used only for incoming funds, with the exception of refunds, to just have that control in place to make sure that funds can't go out of the online platforms, disallowing any debit or credit cards from PayPal and Square as well. As far as funds that are received through via check, oftentimes these are sent through the mail, and so it's important to make sure that you have controls in place to manage the USPS PO boxes, and specifically if there's two keys, or identifying how many keys are available, and ensuring that those are secured and accounted for and assigned to the appropriate people. And there's also some methods of confirming amounts received that we've mentioned here, with acknowledgement letters or audit confirmation letters, as well as organization literature on the website with various donation and sponsorship levels, again to ensure that there's detail associated with the payment that may not be included with the check itself.
Okay, so in terms of expense reimbursements, Okay, so it's good practice for organizations to create, establish in their policy of the requirement for submission of expense reports for pretty much every single expense that the organization incurs. From the perspective of the treasurer, it's good practice to limit the avenues through which payments are issued. Most banks have some sort of bill pay system. So basically you log into your bank online, and then there's a place in the account where information about the vendor could be entered, the amount, the address, and the bank would then issue the check on behalf of the organization and mail it out. There's a risk of the check getting lost in the mail or being intercepted. So weigh that into consideration. Also, that the treasurer can just issue a check from the organization's checkbook, and because of the fact that the treasurer is the one who issues this, the treasurer could then physically hand the check to the entity, the vendor, or the person in need of a reimbursement directly. So there's you lower the risk of the check getting lost in the mail with that option. And there's also an option, especially with Chase, of sending a Zelle payment, and there's no fee associated with this. And also there's an option of sending funds directly through wire, but there's a fee associated with that. So these are just some of the options that we think are good for the treasurer to consider. Paying with cash directly, it's not recommended for obvious reasons. So in terms of payment methods there's a lot of words here, but basically from the treasurer's perspective, the treasurer could issue, payments could be made directly to the merchant via check or ACH. This is a recommended approach, but this also requires planning in the part of the organization to make sure that the vendor is paid timely. There's another option of issuing payment via credit card. So in this instance, someone within an organization, an officer who has been issued a credit card, pays for the expense at the point of sale, and then the treasurer simply reviews after the fact. And also the least recommended approach here is at the very bottom here, issuing an expense reimbursement. This is such that a volunteer or an officer personally pays for organization related expense using their own personal card or their funds, and then they submit an expense report, and then the treasurer reviews and issues reimbursement to the particular volunteer or officer. We definitely recommend careful planning for expenses so that there's ample time for the organization to undertake this approach at the top, in which the organization, the treasurer, directly pays the merchant.
And Anthony, to your point, we do recognize that it's not always possible for timing and planning as far as having a purchase order and making a direct payment. And so there may be situations where there are emergency purchases, and having members of the chapter and officers paying for items kind of on behalf of the organization and then issuing an expense reimbursement. But it also shouldn't be a common practice, and should be limited in nature, just because there are increased fraud risks from expense reimbursements. From going back to the the fraud, the trend from the ACFE report, the expense reimbursement area was one that was quite a bit higher. I think it was in the 23% for not-for-profit organizations compared to 12% for other organizations. And so this is one area to, if to the extent that expense reimbursements are used on a limited basis and it's clearly defined what purchases are allowable for expense reimbursements, I think that will be very beneficial from internal control standpoint.
So we have an Excel file that we created as a starting point in terms of an expense report. If there's interest, we can definitely send the PDF and Excel file to the organization, to AMPP. So this slide just shows an example in which the submitter filled out the expense report, and it then needs to go through the approval process of being approved by the committee, the vice president, and then finally the treasurer reviewing everything, making sure that there's no issues, there's no areas that were overlooked, and all the documentations, like receipts and invoices, have been properly obtained and saved in some sort of repository. So in terms of getting approvals for expenses, we recommend that multiple approvals are obtained first. So a suggested hierarchy of the approval process is that let's say a volunteer within a committee incurs a cost or initiates an expense report. The committee chairperson is the closest to a transaction, so they should approve it first, and then the committee chairperson then forwards it to the vice president, who not only approves it in terms of the legitimacy of the expense report and that there's no errors, but the president should also keep an eye towards the budget. So that's why we recommended in a prior slide that the vice president be the chair of the budgeting committee. From the treasurer's point of view, the treasurer should really act as the final defense for catching errors and issues. So these are some of the issues that could come about: incomplete documentation, missing approvals, and an illegitimate recipient. And the organization should be mindful of the fact that the check signer should not be the payee. So in the rare scenario in which the treasurer incurred some sort of expense on behalf of the organization, then the check signer should be delegated to some other officer in the organization. So these are some sample supporting documentation that the treasurer, that the organization should be maintaining. So expense report, receipts, confirmation of payment, various emails related to the transaction, and other transactional documents, invoices, purchase orders. So in terms of receipts, it's good because the receipts really is the key document that should be present in all expense reports, because receipts evidences that a payment has been made to a merchant. So the treasurer, everyone in the approval process chain should be mindful of looking at the receipts, making sure that it's legitimate, that it's contemporaneous and not created and manipulated. The receipts are itemized so that the specific goods and services and the quantity are immediately visible and obtainable. And also, it's also good practice for the person paying for the bill, if they have an organization credit card, to jot down notes on the receipts, such as water for volunteers, or if it's a team meal, then they would write down the people who attended the meal, etc. And everyone in the approval chain should practice professional skepticism in reviewing the receipts and all the documents that they're looking at. And also this is a fraud issue in which there's always that risk of multiple instances of the same transaction, multiple files related to the same transaction are being submitted for multiple reports to the treasurer, and all the approvers should be mindful of that. And in terms of debits and credit cards issued out of the organization's bank account, we believe that organizations should prefer credit cards over debit cards because of a variety of reasons, and they're listed here. Several credit cards, the funds are not immediately withdrawn. Credit card activities are reflected in their own statements. And those credit card statements group transactions by the various credit card holders. So that's very easy in terms of isolating particular activities by each card holder, versus debit card activities being mixed in with all the other debits in the checking account statements. So it's harder to isolate those transactions. And in terms of the statements, the checking account statements, all that we see typically in those statements in the description are the last 4 digits of the debit card. Additionally, we don't see the cardholder name. So, the organization have to take on the extra step of creating a separate reference, a separate file in which they have a mapping of the different individuals and the debit card that's assigned to each of them. And down the road, if there's some sort of issue and the organizations wants to get more details about debit card transactions, it's more of a hassle because of the fact that they need to know the entire 6-digit debit card number in order to get more information from the bank. And credit card transactions provide organizations with more liability protection, and because of the fact that funds are stay longer in the account, there's opportunity to earn a little bit of interest in the meantime. Before the credit card payment is due. Yeah, because of the timing, there's ample time for the organization to catch issues and to negotiate and basically negotiate the issue before payment is made. And if a debit card information is compromised, the entire bank account funds are immediately exposed. So some considerations about usage of credit cards. The treasurer should review others' credit card usages. And in terms of checks and balances, the treasurer's credit card usage should be reviewed by another officer. And it's also good to have this mindset in which the treasurer is not necessarily involved in the operational side of the organization that is carrying out the mission of the organization, but rather the treasurer serves more in the administrative capacity. And in terms of the organization should also take into consideration the number of credit cards that they issue and then the specific officers that they issue credit cards for. We believe that the organization should really limit the number of credit cards that they allow. So these are based on their roles in the organization. So committees in which there's a lot of activities, committees in which ad hoc purchases need to be made. Those chairpersons logically should be issued credit cards to make those unplanned purchases. And given their seniority, president, vice president, should probably be credit cards. And in terms of the types of expenses that should be incurred in a credit card versus paid out from other methods. So recurring, annually or monthly expenses should be processed through credit cards. There's a lot of benefits to that, not missing payments, etc. And if the organization does implement some sort of credit card program, then the organization should begin to account for all the reward points and rewards that the credit card company issues, and the redemption policy around that should be created.
Yeah, and we're not saying that, because I think there's different points of view on the credit card rewards, and to the extent that there is a credit card program in place, but just a consideration is to make a decision as far as how those points are going to be managed and handled. And in some cases, we've seen where the organization will apply them for the organization for purchases in the future. And that it's just something to consider, because that is an area where there's an overlap in personal and business purchases, and so just wanted to touch on that. So we just got a couple more slides here. So for fundraising events, this is an area where it is really critical to establish a budget for these events, and to the extent there are committees that are formed that can be really steer this process, and ideally looking back several years at the revenues and expenses for events as far as what to expect, but having that kind of going through that formal budgeting process for some of these fundraising events is a key step in the process for events, documenting the names and of attendees, registrations, sponsorships. If it's a golf event, for example, if there's a different prices for different level of sponsorship, and just documenting that, the number of teams, et cetera, and making sure that that information is being recorded and then maintained. Ideally, expenses would be paid from chapter funds directly. So for example, venue fees or catering for food and drinks, gifts, prizes. Again, we understand that it's not always possible where you have especially when volunteers are kind of spread across different locations, and everyone's trying to make sure that all of the items needed for an event are being procured. But ideally having kind of centralized purchasing of those expenses through the organization's debit or credit card, or through a check payment process is ideal. To the extent there's raffling of gifts and prizes, we recommend that for a certain dollar threshold and gifts and prizes over a certain dollar amount, that there's photographic evidence or written documentation just to show and keep a record of the individual that received the item for record keeping purposes, and to kind of have that control in place to ensure the raffle items aren't being misappropriated. And to the extent that raffle items involve, firearms, and ensuring compliance, with ATF requirements. And, to the extent that scholarships are being awarded with, chapters funds, having a, thinking through and formulating a policy that, addresses the intent and, for example, including the recipient. I guess one avenue of this is that if there's relationship between recipients and any officers or members or volunteers, considering scholarship committee members, majors that are eligible for scholarships, essentially defining the criteria is an important part in documenting the award of scholarships. And then from a record keeping standpoint, the documenting the number of applications that are received and in as much detail as available as far as the name of and college, university, major, just to ensure that those funds are being used as intended and even including that on a website or article or something to that effect.
Okay, so organizations should employ some sort of centralized storage, ideally electronically in the cloud. So the financial records that ideally should be saved on a monthly basis are monthly bank statements, credit cards, various supporting documentations for expenses, etc. And we recommend that records should be maintained for a minimum of 5 years. So related to the organization's bank accounts, we recommend that the organization perform, inventory audit of the accounts in terms of, who has access and who has authorizations to write checks and make payments, etc. And the organization should, on a periodic basis, review those authorizations and update them accordingly. So these are some of the access considerations: the people who are able to sign checks, the online profiles, deactivating them if the officer, leaves, etc. Banks and checkbooks, the various point of sale applications, and accounting books, like for instance, QuickBooks Online. In terms of other security access considerations, some of them are listed here. So, access to the organization's email should be updated accordingly. Access to storage also, who has the PO box keys, and who has the equipment, the laptops, the tablets, the petty cash box, the point of sale terminals, and other physical documents related to the organization should be accounted for and returned to the organization if an officer or volunteer leaves.
All right, so I think this is our last kind of area before we definitely want to leave some time for questions. But again, for going through the process of to the extent policies are not already in place, formulating some of the different types of policies. A code of ethics and conduct is a big one. Purchasing and procurement policies. Even if your organization isn't if there are not large purchases from vendors, it's still something to think through and making sure that if there are large purchases for events and venue fees, that there is some consideration there, that the conflicts of interest is another one. We talked about expense reimbursement and some of the ways to if there is going to be an expense reimbursement payment, there's certain requirements as far as an expense report and a certain minimum criteria of documentation and receipts that needs to be submitted. If there's credit card program in place, having a credit card use policy that defines what the credit card can and cannot be used for and what documentation is required for purchases. Scholarships, outlining the criteria for that, as well as for raffling of gifts and prizes and setting a dollar threshold for which documentation or photographic evidence would need to be recorded. And so I think that is it. And so if there are any questions, we're happy to answer those.
Thank you, Travis and Anthony. I am looking at our chat log right now, and I do not see any questions. I will give it just a few seconds to see if anyone adds anything that they would like to have clarified by you.
Yeah, that sounds great. And even if, you know, if you think of some questions, you know, later, we're happy to, you know, you can get in touch with us, you know, via email, and we can certainly provide a response then if there's something that you think of that, you know, it's not coming to you at the moment.
Wonderful. Thank you so much again, Travis and Anthony. This concludes our webinar for today. The recording of today's session will be posted online to the Chapter Officer Resource page on amp.org in case you would like to reference it later. Again, if you have any questions, please feel free to reach out and we will be happy to follow up with you and assist as needed.